many of the trading losses, they do not come from lack of strategies. Actually, they come from selecting a trade that never had any strong probabilities in the first place itself. So the trader may understand the entries, he understands the stop loss, he understands his management. If the trade taken us in the wrong position at a wrong timing or against the market force, against the prevailing, the odds are already against you, right? It's not favorable to you, and therefore what you need to do is, before entering any trade, we need a simple filter, and that filter is what we are going to discuss here. That's what I call as PCT test. And based on that test, I'll give you 8 condition also. So I've prepared that condition, and first let me explain the test, and let's explain different scenarios, and I'll explain that 6 to 8 position, and then you will be able to execute better trades from tomorrow onwards if you can follow that. So PCT, that stands for position, color, and trend. So it's actually a very good framework, so that you can reject the low probability trades before you commit with your capital. So let's look at the basic chart setup. So as usual, see, I'll share the screen and then I'll explain that basic chart setup. So if you look at this one, I hope you can see this. So we have only 2 indicators required. This blue line you ignore, this is 9 EMA. This red line, this is 20 EMA, and this is 200 EMA. So these 2 red lines you consider, this is what I use mostly for my stop loss when I'm capturing a trend. So just look at this 20 EMA and 200 EMA. So this is the 2 important indicator or the moving average. Apart from that, I have the pivots also. That's a different setup. So here I'll talk about this setup where we use 20 EMA and 200 EMA. So basically why we are keeping these 2 EMA is to read the price correctly and to get more clarity on the trend. So very simple. If the price is above 20 and above 200, as you see here, let me remove this 9 EMA for time being. Let me remove the VWAP also and this pivots also. Let's keep only that. So yeah, so this makes more sense and it will give more clarity. So when the price is above this, you are clearly positive uptrend. When the price comes below this, the price is very, the market is very clearly, in a downtrend. So the position, now let's start with PCT. Position means what? Where price is trading in relation to your 20 EMA and 200 EMA. So what do you mean by positive position? When the price is above both the averages, then it is in a positive territory. That is what the uptrend. So this is generally favorable for buying. And when I say negative position, the price will be trading below both moving average 20 EMA and 200 EMA. That is your negative territory, and that is favorable for shorting. So when the price is above these, this is favorable for buying, where the buyers are dominant, and we look for buying position upon proper retracement. Similarly, when the price below this, we look for short opportunity because the dominant trend is the negative, and dominant players are also on the downside. So we try to swim with them, right? So we will be looking for short opportunities. Now, what is a trap zone? Trap zone is when the price like this, you can see this is 20 EMA, this is 200 EMA. So now the price is coming between this 20 EMA and 200 EMA. So this is where the trap zone is. Even for example, this also, once they broke 20 EMA, they are entering in the trap zone. So you may short here, then you get trouble, right? Because it is bouncing from anywhere, still because you have still that bullishness. So this is the range where it can trap and you don't have much clarity. So I hope you got it. Favorable position on the upside when the price is clearly above that. Favorable position on the downside when the price is clearly below that. When the price is trapped in between these 2 EMAs, that is when you will see these are like the trap zone, right? So leave the trap zone alone, and we will be focusing on the other scenarios. Now, so PCT. So P is done, position, favorable position, you understood. Let's look at the second one, that is C. Now you need to look at the dominant color. So this is the second component of your test. So that is the dominant color, right? So we need to identify whether buyers or sellers are currently in control. Yes, you might be above 20 EMA and 200 EMA or below 20 and 200 EMA. That's our first filter. Now we look at the next filter, that is a color. So either you can look at candle size, which side is producing the larger candle. Are the strongest bars are whether green or red. For example, again, let me share the screen and I'll show you. So where the strongest candle is coming. So if you look at this one, so here you can see very strong candle, right? So about 20 EMA, about 200 EMA. So this is the strongest candle, what I mean. And you can also look at number of candles. So for example, one red candle, two or three green candle. That means out of four, let's say three green candle, which means again the strength is on the upside. Similarly, you can see here where the dominant candle is coming. So here, first half it was on the upside when they broke 20 MA on the 200 MA on the upside. Second half when they broke 200 MA on the downside, this is massive downside. So I'll discuss this different scenarios. So just understand where the dominant candle is coming, where the big candle is coming, what is the color of that candle, right? And also number of candles. So these two are need to be take number of candles, whether more number on the green side or more number on the red side. For example, when you take let's say last four candles, out of which let's say three candles on the green side means it's looking positive, three candles on the red side means it's looking negative. So you can look at either the candle size, right? If the red bar is consistently larger, then sellers are showing more power. If the green bar is consistently larger, then the buyers are showing more power. We need to go along with those powerful people or the dominant players, right? Then you need to look at candle consistency. You need to ask yourself which color is producing longer consecutive sequence, which side is appearing more frequently, means number of times, whether green is coming or red is coming. For example, let's say one green is produced, or after that two or more red candle is repeatedly coming, right? Or 5 6 7 red candle is coming, then what is dominant? You got only one or two green candle, but 2 3 4 5 6 red candle means red is dominant, sellers are dominating. Opposite, the buyers are dominating. So the dominant color is therefore in fact is the side which is actually showing greater size and greater consistency or greater frequency, right? So it has to be in terms of size. The bigger candle is red or green. Then in terms of consistency, right, and in terms of frequency, which color is appearing more. That's what I mean by frequency. So the objective is to trade with the winning side, not against the position, right? We need to be with the dominant players. We need to be with the dominant position. So P is done, position. C is done, color. T, that is a trend. So basically, trend is determined with the slope, right? Let me show you once again, and then what I mean by slope, I will tell you. If it is upside slope, right? Just for that, you just need to consider 20 MA only. Let me share again so that it will be very clear. So if you look at this is clearly an upside slope. So the trend is on the upside. If you look at this, it's a clearly upside slope. If you look at this, it's clearly downside slope, trend on the downside. If you look at this part from here onwards, it is downside, right? So the slope is there, means it's now here, there is not much slope, it is going sideways, right? Sometimes when there is no slope, it is going sideways. So what we need when we are talking about the trend, we need to find the clear slope, right? Position means above 20 MA, 200 EMA. Even that also will tell you the trend. If the price is above 20 and 200, that will tell you the trend also, it is uptrend. It will tell you the position also that the buyers are strong. But that when sometimes even the price may be above 20 and 200, but it can go like straight. In that case, even if the price is above 20 and 200, your position is with the bullish setup only, but the trend is slowly fading out. That's why it is turning horizontal. What we need is upside slope also. So not only the price above 20 and 200, we need an upside slope. Similarly, not only the price below 20 or 200 to go on the short side, we need the 20 MA to be sloped on the downside. So I hope this is very clear, right? So a rising 20 MA means upside trend, declining 20 MA means a downward trend, and a flat 20 MA or a zigzag 20 MA means there is no clear trend. So that means, see, there is no need to complicate the trend identification. You just look at the direction of 20 MA. Is it upside or is it downside or is it flat? Right? Position is what I mean by above 20 MA and above VWAP and above 200. See, I can add more parameters here. When I do it, I keep ranking it also, looking at super trend, looking at VWAP, looking at 20, looking at 200. You can make it more filtered. But here I'm just giving a very simple setup, which even a beginner can follow. Now let's look at the filter. Before entering any trade, just ask yourself three questions. Firstly, position. Am I trading the correct position relative to the moving average? If the price is above 20 and 200, am I looking for a buying trade or not? Second, color. Am I trading with the dominant candle color? Whether it could be in terms of frequency or consistency or in terms of size. Am I trading with the dominant color? Thirdly, am I trading with the direction of 20 EMA? Whether there is a slope or not. If the slope is upside, am I trading with that? or if the slope is downside, whether I'm trading on the downside, or if the slope is neutral, if it is flat, I should not be trading. So each of these favorable conditions receives a check. At least 2 out of 3 is favoring, you can go for it, but 3 out of 3 is the perfect setup. So each favorable condition, you can, receive an X, right? So what do you mean by then the PCT test for a buy? Before, if you want to buy, what you need to do is ask yourself, is the price is above 20 and 200 EMA? And is the green color is dominant? And is the, look at this one. This is what I mean by that. Let me share the screen again so you can see very clearly here. Look at this. Okay. So look at this. First, my position. So location, is it favoring me to take a upside trade? Yes, location, because it's above 20 and 200. What about the dominant candle? In terms of size also, upside. In terms of frequency also. In terms of consistency also, right? Upside. Majority will be upside candle. And is there slope on the upside? Slope on the upside. So can I take an upside trade? So this is what I mean by the PCT filter. So what I need to do, I need to ask if I need to buy, is the price above 220? Is the green color is dominant? Is 20 EMA is rising? Similarly, for a short trade opportunity, I need to check whether the price is below 220. Is the red is dominant, and is there a slope? Here, I'll show you that example also. So here, if you see, so if I need to take a trade here, look at this, it's below 20 and 200. And also, which one is dominant? Red is dominant. The strength also on the red side. And is it sloping downside? Yes, it is sloping downside. Look at this also, when it is below this, and you can see more dominance on what side? Red side. That means selling side. So when you get a bounce, once it comes again below 20 MA, here is where you'll be shorting it, right? So I hope this is very clear. So this PCT test will actually give you high probability trade. Now the question is how you grade the trade. So I told you, right? You get 1x if one condition is favorable. The best setup is like at least 2 checks you get and 1x, which is acceptable setup. 1 check and 2x, that's a poor setup. Okay, let me show you with a diagram. So it will be more easy for you to understand. So this diagram, I will explain now. Okay, so this is the PCT test that I'm talking about. Okay, so the idea, let's start with the long setup first. Okay, so the ideal long setup is, you can see PCT test. All the 3 are coming positive. The price is about, let's say this is 20 and this is 200. It is EMA in our case, right? We need exponential moving average as we are trading mostly indices and options. So the price is above and consistent green candles. So color is okay. Trend is EMA is sloping also. So it's a favorable setup. So this is the best scenario for long. When you get this setup, you should definitely go on the long side. Similarly, what is the ideal short setup? The price below this, more red candles, strong red candles, so color is matched, and trend, this is sloping downside. So all the 3 are coming in perfect scenario. So you'll be going on the short side. Now, this is okay, right? This is acceptable because 2 conditions are in your favor, because price is above that 20 and 200, and color is also in favor to you, but it is slightly turning flat. So probability is not as much as this, but still considering the fact that these 2 are in your favor, acceptable long. This is ideal long. This is okay. Compared to first, the probability is less. Now coming to this short side, right? Again, 2 are in your favor, third is not coming. Acceptable short position. Now, what if the color is not in your favor? Here, you can see prices above that, but trend is also there. But now the majority of the candles are coming as red, but that is not in your favor because sometimes it can reverse. It shows that now, even though price is there, there can be a reversal. So avoid in this scenario, you need to avoid. Direction, the slope is to an extent okay, but color, if it is changing, you are seeing more continuous red candles even when the price is above, then avoid, there may be a potential reversal. Same here also. That's a poor setup. Avoid that. Better to avoid this. And next scenario, nothing is coming, you don't even consider. So I hope this will explain everything, right? Very perfectly. There is nothing more we need explanation. So that itself is correct. Now, when it comes to market open, market open is slightly different. See, at the beginning of the trading day, there is not enough price action to establish the proper trend. Previous day price action only what you see, and then opening market only, then you will get the price action and other details. So trend here automatically receives an X in that case. So trend will be, you'll be giving an X, right? That means a morning trade must have to see the correct position and correct color. Trend you X means cross. Okay, that's what I mean. Some of you are not in X means cross. So I'm talking about tick and cross, check and X. I don't know how many of you understood that language, but if you have seen the diagram, you understood, right? So here you just need to look at correct position and correct color only. Ignore the trend, right? And for example, you get a stock opens above both moving averages, but the first candle is strongly red. Then the PCT test, what is actually happening? Position is correct, but color is not correct. Trend is also not correct. Then this is a two cross. Therefore, you should not be trying that trade. I hope very clear, right? And then you see the color changes and the entries. One of the useful application of this framework is color changing setup, the bearish color change. Suppose the price is below both the moving averages like 20 and 200, and 20 EMA is declining also, and red is the dominant color, and a green candle appear near 20 EMA. Then what happens is, what I mean by that is, you have 20 EMA, you have 200 EMA, price is below that, so what trade you will be looking for? Short trade. But suddenly you got a bounce to 20 EMA, green candle came. So here is what the perfect retracement you got, so that you get a better price. Now, if this green candle is taken out by a red candle, you enter there. Similarly, upside, this is 20 EMA, 200 EMA, price above that, location is correct. You are looking for a long entry and price came to 20, still slope was there. And when it is coming to 20, it is red. Now it is overcoming with a green candle. That's where the trend is going to resume. You can enter again. So this is what I mean by the color changing entry. There you get bearish entry also. If the green candle is taken out by the red candle, similarly you get the bullish trade when the red candle is taken out by the green candle. And location is very important. See, you may see a trade may pass all the PCT test, but still it can be poorly located. If the price is above both the moving averages, green is dominant and 20 EMA is rising, but anywhere you can't take the entry. At the top, if 20 EMA is here, price is here, you don't take the entry. That may be the exit point. So this give you the check, this PCT. But if the price is far away from 20, don't do it. You have to wait for a retracement close to 20. And that is because if it is moving far away from 20, this is overextended, overstretched, and now the sell-off can come, right? Just don't get into that trap. So location, market state matter. What do you mean by market state? There can be narrow state and a wide state, right? So when the 20 EMA and 200 EMA is close together, that's a narrow state. So here you will be looking for a breakout. So here, price is less extended, risk can be controlled more easily. There is no more room for expansion. And wide state means market is overstretched. The previous chart that I have shown you. So here this is actually indicating an extended move or an overheated trend. It may come down. A late entry you may get in, right? Or risk reward also may be very less. So avoid that. So what you need to look for is retracement to 20 EMA. You see your favorable bar there. Retracement means in a bullish scenario, you get a red candle retracement. That's the perfect pullback, the healthy pullback that I'm talking about. And then you get a green entry. And just below the green is your stop loss. Enter, finish it off. That's the area where the trend never, is going to resume. One rule, never trade against the dominant trend. One large candle, that doesn't mean automatically it is changing the market direction. Suppose if your chart contains repeated large red candles and long sequences of red and a declining 20 EMA, and then one long green candle appears, that single candle doesn't automatically make the market bullish. The entire preceding structure, that still shows that sellers are in control. So do not give more importance to that one random candle which is that could be an algo candle, right? The broader evidence and the broader market structure is more important for us. So trade with the dominant team, the big players, until others start controlling, right? Or this control is clearly changing. That means if it is on the downtrend, it have to come above 20 EMA. That is why if you observe my live market sessions, let's go on the upside only above 20 EMA, or let's go on the downside only below 20 EMA. Otherwise, we don't take counter trade, right? So this is the points that you need to keep in mind. And if you can follow this, definitely you will be able to do good. So what is a complete checklist? I can repeat once again. Before every buy trade, ask yourself, is the price is above 20 EMA and 200 EMA? One check. Is the green dominant color? Yes. Is the 20 EMA rising? Yes. Is a setup very close to 20 MA or far away? If it is far away, avoid it. If it is close, yes, I'll try. Is the state reasonably narrow? If it is narrow, it is good. Is the price overly extended? Not good. So these are the things that you need to ask. Similarly for shorting, opposite, right? Is the price below 20 and 200? Is the red dominant color? Is the 20 EMA is declining? Yes. If the setup is near 20 or 200, if it is far away, I avoid. If it is near, I'll take that. Is the state reasonably narrow or the price is excessively extended or not? So the final rules: buy above both moving averages and short below both the moving averages. Rule 2, trade with the dominant color. Rule 3, trade with the direction of 20 EMA. Rule 4, require at least 2 out of the 3 PCT checks to be satisfied for you to enter. If 3 is satisfied, best. And even if the 3 is satisfied, if the location is not correct, that's not good. What I mean by location, near to 20 MA. Now, at the market open, rule 5, at the market open, the trend may automatically receive a cross because you don't know the trend. So it's a cross. You look at the other 2 parameters. So you prefer the setups near 20 MA or 200 MA, prefer narrow states over wide state, and avoid the trap zone when the price is between 20 MA or VWAP or 20 MA and 200 MA. So guys, that's all what I want to discuss. See, the trading performance, I am sure that it can improve significantly by rejecting poor trades before you entering them. Now, if you keep check like this, you can automatically avoid these poor trades, right? So the PCT framework is asking 3 simple questions. Is the position is correct? Is the dominant color is aligned? Is the trend is supportive for you? When these conditions align, the trade has a stronger probability. And when they do not align, the trade should be rejected. Should not even concern about that. Even if the 3 satisfied, if it is far away, you're not going to take that because risk reward is not in your favor. Let it come to 20 MA, close to that level. So the objective is not to take more trades. The objective is to take the quality trade, the better trade. So I prefer quality over quantity. Never run after the quantity. So when the position, when the color, when the trend, and also the location and the market state support the same direction, the trade selection become more disciplined, more consistent, and very easy to repeat and replicate. This is what I do, and this is what I tell my mentees to do. This is what I demonstrate in the live market. So if you would like to join us in the live market session, you can join us. You'll be able to see that and you can trade with us. So that's it, guys. Thank you so much. I hope you got some learning and start using this practically from tomorrow. See you. All the best.